Hello, hello, hello. How is everybody? Who's in the chat today? We got quite a few things to go over for the week ahead here. Nice to see you in here, James. Doing well myself, man. Oh, man. Just to think that I'm going to have to do another stream in a little bit here. So this is the first stream of the week. Turn down this just a hair. So this is going to be the first stream of the week. It's going to be a simple cover of the economic calendar for the week ahead of us. And we're going to be going over what assets those economic events are most likely to impact. And then I have here some outlooks for us to check out towards the end of that. Let me go ahead and real quick. Looks like this. So I got a few things. You could see that's the FX macro guy. Man, is he consistent or what? Such great and free analysis. Free like this show. And here I am telling you to go read it. Yeah. So we're going to be going over economic calendar stuff. We'll go over some daily range probability trade plans. And then we'll go over some economic news. And believe it or not, there's actually quite a bit of crypto stuff I want to cover today. And then some oil stuff. So crypto and oil, they're kind of on the docket here for this stream. And what I said earlier about anticipating another stream coming up, well, this stream here is for the market open. And the next stream is going to be tomorrow at New York. So I got my work cut out for me here. I got to take a nap sometime after dinner here and then get ready for the next stream. Daily streams. All right, let's hop right on into it. So first, we're going to just check out the economic calendar. And we're going to go straight to where we currently are. So this is where we currently are. So right off the bat, right now we just have some PCI. I think this is actually the PMI services and composite for New Zealand. And those should be coming out in about an hour. I won't be around for that. But if those... New Zealand is in a particularly bad spot right now economically. I would not be surprised to see these PMIs continue to come in below the 50 level. However, it would be nice if they just inched just above that, right? The services PMI here for New Zealand, right here, this little number, it's just below 50. It's at 49.8. So if there was any sort of improvement in New Zealand services, it would be great to see. But from the research and the outlooks that I've read and that I've posted in the Plan the Profit Discord, link to that's right there in the description. It's the very first link. Get there and for free. Read all these outlooks for free. They're all free outlooks anyway. Yeah, the outlooks that I've read for New Zealand, they're not so hot. They're, to say the least, they're not so hot. However, I have hope that there will at least be some benefit here, some benefit to some positive news out of New Zealand. Cross your fingers here, but net, I'm pretty bearish on New Zealand as well as the market consensus overall. Going forward, we have inflation data out of Canada. And then, let me just go ahead and check up on the stream health. All right, nice to see you there, Pascal. Man, we have quite a great week ahead for us, don't we? Don't we? We have RBA meeting minutes here on the 19th, which is tomorrow. So on Monday, early Monday, we're going to be seeing that. Oh, I wonder what this is. Add to calendar. Oh, wow. That's a cool, neat little feature. So when you click on that, it takes you right to your Google Calendar. And then there's also a launch chart button. That is interesting. Got a little extra music going here. Some more Flowerhead. Let me know what you guys think of the music. So long it's not distracting, it's all good. Let's see here. And then we have some RBA speeches coming out immediately after the minutes. So we're going to have to watch Aussie and the Australian equities market here. Yeah, one just... Yeah, I can't quite make up my mind, so I'll just leave it off for now. I want to get through at least this section with all the heavy reading, right? Industrial production out of Japan, that'll be just fine, although that's anticipated probably to come in lower because manufacturing ain't improving in Japan. PMIs in Germany might end up being a leading indicator. Depends on how poorly they come out, because you can see we're probably going to get some falling PPIs, which isn't particularly fantastic. There's some analysts that are anticipating a lot of growth out of Europe. In fact, more growth out of Europe than the United States. And I doubt that Europe is actually going to get that growth actually without a little bit of boost to their inflation, but they ain't going to get it so long the ECB's on the more hawkish side, right? You need growth. You need economic growth, GDP style. And you need inflation to get into that, growth inflation matrix Goldilocks quadrant. Let's see, what else we got here? We have a ton of Fed speeches. Oh, and then New Zealand has another major economic event. The Global Dairy Trade Price Index has its next update. And if global dairy prices continue to fall, the New Zealand dollar ain't gonna do so hot. Demand for New Zealand dollar is gonna fall. All right, we got another speech from the Fed, the Tankan Index, and then we have a BOJ meeting minutes release in here. If there is going to be any sort of surprise for a stronger yen, this would be the first place to look next week. So this is on the 20th, which is this upcoming Tuesday. So yen might have a turnaround Tuesday if this statement here, if these meeting minutes are particularly hawkish, or if they indicate that the Bank of Japan might get closer to their yield curve control and making that decision sometime around July rather than in October. We'll see. If you want more information on the debate going around whether or not we'll actually have the Bank of Japan modify their yield curve control in July or in October, I actually recommend reading MUFG's free outlooks that they release. Links to that are in the Discord under the Outlooks research channel. Westpac leading index month over month will be interesting to see for New Zealand. No, is that New Zealand or is that Australia? Yep, that's Australia. Australia has the white stars. New Zealand I think has the red stars, if I'm not mistaken. Yep, that is correct. The Mundo. Okay, some major inflation data coming out of the UK here on Tuesday. So if that inflation data continues to stay relatively elevated, which it's anticipated to, don't get me wrong, it'll probably come down, rate of change flat or even a bit down. But Lord, inflation in the UK has been absolutely horrid. And that's one of the reasons why everyone is anticipating the Bank of England to continue hiking. So we got PPI, more inflation data. All right, so Tuesday is gonna be a big day if you're a British pound trader, and these, don't get me wrong, while they may come in sort of flat or a little high or a little low, on an absolute basis, they're super high, and the BOE is probably not going to stop its hikes. So all in all, it'll probably be best to stay on the safe side, and a bullish Great British Pound is what I have in mind. Let's go ahead and continue on here. All right, MBAs for the US. So if you're in the housing market, or if you're in real estate, or you're looking at REITs in the equities market, you'll probably want to keep a close eye on this. And then we have retail information and housing information coming out of Canada on Wednesday. So if the Canadian economy is slowing down, this would be where you could potentially start to get some signals on that. So just be careful around Wednesday for some potential information on the strength of the Canadian economy here. Who knows, maybe these numbers come out nice and strong and take advantage of that pop we saw on US dollar CAD to the downside after the ECB meeting, right? Which was this move here. Yeah, man. It could certainly do one big job. Wow, that's a big negative skew right there. But man, yeah. It looks like CAD usually sees like nice consistent up moves and then has pretty volatile down moves. And I guess that just comes from outperformance of oil. Oil shocks probably contribute a lot to these deviations in the Canadian distribution of where the lows come in for any given day, is what I'd assume causes this factor here. So that'll be kind of interesting. For now, it looks like everything's kind of neutral, but it's losing some strength here. You can see oil is going down a tad here, so that's maybe assisting dollar CAD going higher at the moment. Let's keep a roll on. So after all that Canadian information, we get more testimony from people at the Federal Reserve. And depending on what they say, we could get hawkish or dovish surprises. Could pretty much go either way, but considering how the dot plot came out, I think the Fed's probably going to stay on a hawkish lean for their speeches up ahead. But I wonder if any of them are going to have little slip-ups like Powell did when he mentioned, this isn't a skip. that little, the Freudian skip is what I called it. Powell had a little Freudian skip. Oh man. All right, we're almost done with the economic calendar here, but it's good to know just generally what days ahead we're going to have potential rotations or risk events from the economic calendar on the assets that we're trading. And a big one's going to be those Fed speeches, especially for the US dollar, considering the US dollar has been the primary driver that has moved most markets right now. Like, most markets are pretty much dollar driven, whether or not it's weak or strong. It's been the driver for a lot of assets. A very strong driver. API crude oil stock change, that might be interesting to watch for oil guys. And that is on Wednesday. Okie doke. Okay. Some information on Japan. The 5-year JGB auctions will be interesting to see because depending on how aggressive the market buys into these auctions, or the Bank of Japan buys into these auctions, and what yields, are being purchased and the quantity that's being purchased, it'll be interesting to see an expert in the JGB markets, because I don't consider myself a JGB expert, right? I would rather listen to what an MUFG outlook will have to say come the Thursday or the Friday of this upcoming week here on this little economic event, and how it might be useful or not useful for Bank of Japan policy going forward. It depends what happens on this day. Alrighty, let's keep a going. We have ECB Governing Council meeting. Benchmark interest rate is set by Governing Council. Primary objective. Alright. Yeah. So Euro, this is going to be a big one. All day on Thursday, Thursday and Friday are just going to be jam-packed with economic events. I don't even need to scroll down this calendar to know that, because we have the PMIs coming out. Here we have some information here on BOE, ECB, more Fed speeches, BOE speeches, BOE meeting minutes. Oh man, and then initial jobless claims, Chicago Fed Activity Index. Oh man, continuing jobless claims, more Fed speeches. Oh boy, Thursday, Friday is going to be a volatile mess. Based on the outlooks that I was reading over the weekend and the analysis I did in the trading group for the week ahead, one thing consistently came up in the indicators and in the outlooks as far as timing was concerned, and that is the days with the largest reversal potential for the week ahead, or the largest continuation potential for the week ahead, come from the economic events getting printed on Thursday and Friday. So while there certainly could be a lot of volatility around the Fed speeches and, some intraday volatility trades, maybe some day-to-day volatility trades we can stream for everything else that I've mentioned so far, the big moves that could potentially set up swing trades are likely to be found on Thursday and Friday. So don't get hung up on any particular move over the next 3 trading days, because that could just be noise leading into what traders are actually anticipating will move markets in a much more significant way come Thursday, Friday. For oil's got a big day with all these EIA releases coming out. It's going to be a big day. Yeah, and then all these auctions and mortgage rate stuff. Yeah. More Fed speeches. Okay, and then we have, that is Australian PMIs. UK consumer confidence forecasted to improve. Inflation out of Japan, that's going to be a big, big deal for Japan. Another potential point of rotation for the BOJ. However, inflation is anticipated year over year to decline. Month over month, no forecast yet here. And then we have Japanese PMIs coming out. Oh boy. PMI and inflation hitting on the same day for Japan. Yeah. Not only do you have those BOJ minutes to watch out for, you know, I don't anticipate that the BOJ is going to say anything revolutionary or give any particularly hawkish or dovish insight. They're just probably going to say in those minutes, you know, we continue to look for where inflation's getting too hot, or maybe when the yen's getting too strong, or maybe when business confidence is getting astronomically high, or if we're having to interact with the bond market, intervene in the bond market. But this could cause, if there's significant deviations in this data here that's coming up this Thursday, the BOJ may be inclined to start updating its expectations going into June. So this will be a particularly volatile trading day, especially if the data deviates significantly from expectations. Then UK retail sales to end the day. So UK has a jam-packed week. Pound is going to be one interesting currency to trade. The FTSE is going to be one interesting market to watch going throughout the rest of this week. And then we have French PMIs, German PMIs. So Friday is all the European PMIs. We have Eurozone PMIs, UK PMIs, more Fed speeches. All right. Sales in Canada. US PMIs, which are expected to come in a bit lower. And then rig counts, more oil news. And then more Fed speeches, and then this is all next week. Alrighty. Yeah, so a lot to stay on top of going into the week ahead here. Man, that's quite a lot. I don't know about you guys, but it seems like it's going to be pretty chill trading up until Wednesday, Thursday, when the volatility might start picking up. Yeah. So, what assets do you guys want me to look at here going into the day ahead? Note that, like, check out how oil and NQ aren't really trading right now. So we're really only limited to checking out Bitcoin, cryptos, right? And FX pairs. How about this? Why don't we check out... Let's check out Great British Pound against the yen. Well, I don't know about you, but that looks bullish to me. As far as the day ahead here, I'm not so sure. Let's see here. What I want actually is to hide the next period's pivots. They seem to be getting in the way. Euro dollar and yen pairs already. There's probably a bit more drawdown here on the pound yen that we could see. Probably to, what is it, 81... Yeah, 181.50-ish, roughly around here. And then as far as where your top's going to end up, I'd say most of the time you get your top. Where's the 50-50 level? So 50% of your highs, your tops for the trading day ahead of us, are above 182.3. And 50% of your tops for the trading day are below here. Now, with the way that the yen has been for the last several days, it has gone and reached these super high up levels insanely frequently. So I'd be insanely careful, right? I'd say once you start getting past like 182.80, 182.800, this probably is a reasonable threshold for anticipating like, oh man, we might get a tail risk where we end up moving into the 183 price range. All right. Let's see. Let's check out this song. Alrighty. Let's go ahead and check out Eurodollar. I'll go ahead and hide the yield spread indicator real quick here. So then we have our red and green candles. Yeah, it looks like most of our highs for the day occur between our 0.5 and our 1.5. So I'd be careful going long here. So if you're anticipating another breakout, a reasonable idea might be to wait until you're above the R1.5 daily pivot. That is probably the threshold for the day. And it's probably going to be the same thing on the downside. Yeah, once you go past this S1.5, you're starting to deal with very slim odds here. Someone might say like, oh, you could probably target this prior swing high here. I don't know about that. Just stick with the stats. Most of the time, your low for the day occurs above that S1.5 pivot, right? 60% of your lows occur above that S1.5 daily pivot. So, I don't know. It seems like maybe you could go for a range pivot bias here. And you can pick bullish or bearish. Either one will do. So this would be the bearish range bias based off the statistics ahead of us for the day. And we have compressed pivots, which is reasonable because the volatility has been so tight. Well, the thing to keep in mind here is once you go past the R1 pivot, you can more easily reach pivots like R2 when you have compressed conditions. And when you have a compressed condition and you're a bear, you can also understand once you go past this S1 pivot and your volatility starts expanding again, you can more easily hit the S2 pivot. So if you're anticipating volatility to continue decreasing from this point or stay similar to the prior period, this might be a reasonable range to be trading. It's kind of like a 60 pip range to check. Yeah, 50 pip range. This area between S1 and R1. And you can use the bullish or the bearish variant. Either one's fine. The whole idea is whichever one you choose, try and stick to the parameters here, unless you're anticipating volatility to increase. And if that's your expectation, is that going into this next trading day that the volatility is going to pop up right away at some point in the next 24 hours, then maybe anticipating the break of this R1 pivot or the break of this S1 pivot and targeting prices below here or targeting prices above here, right? Just using these R1 and S1 pivots as thresholds, because again, when we turn on the distributions, you can see, oh, once we get above the R1 pivot, we start dealing with sort of a bubble situation where it gets harder and harder to determine where the top for the day is going to come in. And below the S1 pivot, while you still have a bit of a cluster of where your lows come in, kind of in this area right here, it's still kind of large. Once you start going past this S1.5 pivot, you're starting to deal with falling knife situations here. So yeah, this is why we like to use, at least for the way I like to approach trading pivot points, I like to use statistics on the day by day when it comes down to biasing my pivot points. And now that I've interpreted my pivots through my probabilities, I can just turn off the range probabilities and keep my trading bias on the screen and manage my trades and position a lot more simply, right? Because you're just, instead of looking at all these lines in an entire distribution and trying to think of exactly where the best price to get in at, where your threshold should be for certain probabilities, you can just find generally which, pivot bias works best, and then stick to that strategy. And if the strategy doesn't work, you try again the next day, or you try again for the week, or you try again for the month. Yeah. Oh, that's a nice song. Gotta turn it down just a tad. It's a bit too much energy. It's called Around the World in 60 Seconds, Mr. Old Flowerhead. If you want to listen to some of the music in the stream, you can go ahead and pull it up. It's down there in the description. And if you want access to these indicators, just go to the wap.com link for Boss Benchmarks. You sign up there, you get access to the trading group that I run, a chat with all my trades and all my personal analysis in there, a channel that just has group trade plans, so anyone who's in the group who's using these indicators can talk and share and learn how to use these indicators more competently through sharing trade plans with each other, where I also share my own trade plans. And then, yeah, you get access to not just these indicators that I'm showing here, you get access to all of my indicators, including the ones that I end up making in the future. And I got a little something to tease here. It's not quite ready, but over the weekend, I've made some excellent progress making improvements to range probabilities. I'm so looking forward to the next update that's coming for range probabilities. I think the most immediate update for it next is just going to be a technical upgrade. So then we'll have improved performance, there'll be a couple more new settings. And then after that technical bump, there's going to be a new major feature upgrade. And it's going to help. Instead, one of the problems with a lot of these indicators is it helps you figure out what prices you should be interested in, but it doesn't necessarily help you with exact timings. So I'm figuring out a little way to figure out timings based off these distributions here. And I'm going to do my best. I'm going to go ahead and check it out. I'm going to backtest it first and everything, make sure that it's legit. And after I do all my little tests, I'm going to say, oh, I think this is ready for you guys. And then I'll come on the stream, I'll show it off, and every day it's going to be a part of the stream. Alrighty, so if you want all this stuff and all the feature upgrades and everything, join the trading group. It's the trading group plus indicators product, $100 a month. Pretty darn affordable. Alrighty, let's see here. Let's go ahead and check out the yen pairs. Now, Pascal, or anybody else, is there any specific yen pair that you want me to look at? I gotta get a refill. I'm kind of interested in New Zealand yen. Wow, check how strong this has been. It's literally just been going up to the right. It has been so strong. Look how strong that is. Wow, that is a very, very good linear regression trend right there. Let's do Wow. Check out how tight that linear regression trend is. Jeez. Once it starts significantly deviating from this linear trend, I would anticipate a change. Euro yen? Oh yeah, you're right. Pascal range probabilities is so useful on any time frame. From intraday to swing trading on the weekly to swing trading on a monthly. Yeah, man. It is so incredibly useful just to have those distributions available. Whole new world. Whole new world. And it's not hard to learn either. You know, it's fancy statistics math behind it that make it way more advanced than any other statistics indicator that I think is available right now. But you know what? Not the easiest math in the world, but once you see it, you're like, oh, here's how I read this, here's how I read that. I get it. Here are the opportunities, right? And here are the major risks that I need to be aware of going forward into the day, the week, the month ahead. And the other part is that it's not me telling you this, right? You don't have to, you just have to come to me to learn how to interpret the indicator for the first time. But if you've already taken like a statistics 1 class, any sort of intro to statistics course, you'll know how to do interpretations on histograms. It's especially intuitive. And that means in the long run, you're not going to need me to help you do risk management. You know, make your own decisions on risk management, make your own decisions on any assets that you're trading, for what kind of probabilities you're taking on your risks, on your trading opportunities. It's a good dose of independence. So let's go ahead and turn on the range probabilities here. I gotta probably reduce the number of simulations. It's loading so much data. One of the things that I did in the next update is I updated the simulations code. So hopefully it'll work a lot more frequently. Oh yeah, check that out. It's taking too long to load. All right. Less simulations. So instead of 5,000 simulations, we're only doing 3,000. Hopefully this time it works. Otherwise, I can just change the time frame. Let's see if that one works. Oh wow, it works on the 1 hour time frame. Sometimes it's just a little funky. You gotta switch to a 1 hour or 2 hour. It's fine. So it looks like the low for the day is probably in, right? You can see that we have this super early bump in the distribution, and then we have this bump. So roughly around here, between the price range of 88.2 and 88.35, this whole 15 pip area, you have this neat bump in the distribution. And check this out, the exact spot where the low is in so far for the day is very close to the median of this linear regressed trend that we identified, but it's also the most likely spot where your low is to come in for the day. So see this? 21.967% of the time, roughly a fifth of the time, the low for the trading day on New Zealand yen occurs between these two prices of 88.308 and 88.261. This exact 4.7 pip range. 20% of the time occurs right around here. Well, now it's redone the automatic simulations, and now its odds increased. And now it says 23% of the time. Yeah, man. Low is probably in for the day. And you could see some higher prices here, although 33% of the time your top for the day is already in. But considering the path we've been going and this linear trend we have ahead of us, sure, I would anticipate higher prices by the end of the day based off the forecast of this linear trend. right? Because the linear trend is anticipating that we would end today around 88.9, effectively 40 to 50 pips higher from here on a linear basis, right? So if you're anticipating that the trend, right, the assumption here is that the trend from the last 1, 2, 3, 4 trading days continues into the current trading day, that the assumption would be we would end the day again somewhere between these two blue lines. And this is a free tool in TradingView. Alrighty, let's go ahead and check out Euro Yen. And then we're going to go over a couple of macro things. Let's see, do we have the same thing? 1, 2, 3, 4. Yeah, we sort of do. So there's another linear trend. Yeah. We're probably just going to end up... You don't even need the range probabilities right now. This is a relatively decent assumption to continue making if you're anticipating the JPY to continue getting weaker until the Wednesday, Friday events for Japan occur, right? The BOJ meeting minutes on Wednesday, and then Japanese inflation and PMIs on Friday. So I think this would be a relatively simple assumption to be making, although this is saying that on median you're up like 85 pips, 75 pips by the end of the trading day. Yeah, so be careful shorting this. The trend is not the bear's friend at the moment. Okay, let's go ahead and look at this little bit of information. So we're just going to... Here, I'm going to, real quick, just turn off the music. So let's see here. The FX macro guy, one of my favorite people to read, is bullish on the dollar, bearish on the euro, which is personally my bias, and also the bias of many, many institutions. Believe it or not, Westpac is doing the exact opposite of this, and I'm trying to figure out exactly why they have the assumptions for those decisions. And I'm going to be reading Westpac's outlooks and general media a little bit more closely. Time to take off the jacket. Getting a little hot here. Pound is bullish from his outlook, which I absolutely agree with. Aussie bullish, sure. New Zealand neutral. Well, I agree in general, but I'm pretty bearish on New Zealand dollar standalone, so I disagree with him on this. CAD bullish, short term, probably no. Like the first 2 or 3 trading days ahead of us here, probably not. But once we start getting into the oil economic events coming up here, and some of the Canadian economic events coming up, there is certainly opportunity for a bullish Canadian. And then yen neutral. Yeah, we just got to wait for BOJ decision Wednesday, Friday. That's when it's going to make a difference here on the yen. And then we got this thing from the U.S. Department of the Treasury. And this is a macroeconomic foreign exchange policies for major trading partners of the United States. It's insanely dry reading. This is insanely dry reading, But if you want to read this, if you want some in-depth analysis on the trading partners with the United States, in all seriousness, what I think would be particularly useful is maybe to start reading from where is it? From where this section we're scrolling up to starts. Yeah. So from page 20, here, page 20, where you have the foreign exchange reserves table here, to start reading down from here. And this is page 22 in the PDF, but it's just page 20 labeled in the document. And I'm actually going to be going through this section here, starting from this page and just scrolling down. And, you know, don't get me wrong, it's stuff that generally we all should know already, but that's kind of the point. This is just a restatement of the current facts for, well, exchange between the U.S. and its trading partners. And kind of on a macro side where all these countries lie with each other. So I think this is actually a great thing to read if you're brand new to reading outlooks, if you're brand new to macro research, if you're just, you know, if you're just starting out fresh. This is actually a reasonably good place to start to get you caught up on the current relationship the United States has with countries around the world. And even if you're an intermediate or experienced trader, this is a good thing to read just to make sure that your views line up with the data that the United States government is collecting. And there may be some geopolitical insights in here as to future outlooks for certain trading partners. We'll see. I haven't read through it yet, but I recommend reading through this. This would actually be an insanely good thing to spend your time on, just to learn about how the world works and how the world interacts with one another. All right, so you got that. Now, at the beginning of the stream, I mentioned some crypto stuff, and here it is. SEC secures emergency relief to protect Binance.us customers' assets. Man, okay, so they're getting involved here, but so is Binance. Binance is, I think, is sort of cooperating with them to an extent. Not so sure. I have to read this a little bit more in detail. I got this also in my inbox related to crypto from Decrypt. Prometheum, what you need to know about the SEC's poster child for crypto compliance. So this was kind of interesting. I recommend checking out this particular article. Is the fact that this particular group is getting some preferential treatment by the SEC is interesting. And this article kind of goes over some speculation as to why they could be getting that preferential treatment. On the oil side of things, addressed by SEC Secretary General, and by the way, if you just want this article, just Google search Prometheum and Decrypt. It'll be the very, very first article that shows up. And I was reading this from the OPEC Secretary General, and I came down here and I saw bullet points, and I'm like, oh, great, cool. So let's read this real quick. OPEC has been clear in highlighting the very real and dangerous consequences of divestment and underinvestment in the oil industry. Market volatility endangers energy security, imperils economic growth, jeopardizes sustainable development. So, and then they have some outlooks here for increasing oil supply out into the 2030s. Yeah. Reading these sort of things can be sort of dry, but this is technically, this has some geopolitical and macroeconomic outlook tied together here. You'll note that a lot of macroeconomic outlooks have some geopolitical bend to them. And if geopolitics is skewing one particular way, for example, with Russia, Ukraine, right? How much aid and stimulus was given to Ukraine and to Europe to support Ukraine? And then how much support has been given to India and China from Russia so then they can offload oil and stay in business effectively? So there are economic macro movements that can be projected and forecasted from geopolitical movements, which is why we have a geopolitical research channel in the Plan to Profit Discord and a macro to micro research channel in the Plan to Profit Discord as well. Remember, links to all that's in the description. You'll find links to all this stuff in there. Let's see here. Home, Treasury. They have a Financial Stability Oversight Council. Let's see here. Financial markets and financial institutions and financial services. Yeah. Council published that. So this is just a current update. Charged by statute of identifying risks. So U.S. Department of Treasury identifies these areas as sectors of the financial markets where there can be particularly elevated risk, and then there are reports for you to read on why they think those risks are real and what could either make them worse and what could alleviate them. So if you're not familiar with any of these risks, or even approximately aware, even just reading these paragraphs here and skimming these documents will automatically make you more informed than every single retail trader out there and put you on par with novice professionals in the financial world. All right, let's see Financial Juice if it has any new information here. And it doesn't look like we got any new information here. It's just Binance and SEC strike deal to move all U.S. customer funds and wallet keys back on shore. And that's just about it. We got some stuff. Fed officials suggest rates may need to go higher to tame inflation. So again, like I said, my expectation for the Fed speeches coming up in the next week and the testimonies we're about to have are for the Fed speakers, the FOMC speakers, to all have a consensus hawkish lean. So it shouldn't be volatile shakes for the market. Those are more likely to come Thursday, Friday, when we're getting slews of new, very important macroeconomic data points. That could set up for swing trades over the next 2 weeks, depending on how those two pieces of information come out. Alrighty. I think that's just about it. Let me go ahead and check the chat here if there's any more requests. Oh yeah, oil is definitely going to be with us for many decades. The profits and the subsidization of the oil industry, the growth in the oil industry is what effectively subsidizes and pays for, renewable energy. And that also comes with the whole carbon credit stuff as well, where businesses that pollute have to purchase carbon credits to offset their pollution, and then the money that they spend on their carbon credits go to subsidizing green energy and reforestation, all sorts of good stuff for the environment. But without the purchase of those carbon credits from the profits of the oil industry, you're not going to have those subsidies. And those green energy subsidies are going to have to come directly out of taxes for income and property instead of from the profits directly levied on, you know, carbon credits and directly on the profits of energy companies. Yeah. So, James, you want pound New Zealand and pound Aussie? All right, I'll deliver. So let's see here. Pound, pound, pound. Oh man, look. All the pounds are up. Don't get me wrong, they're up only by nominal amounts. Though the two that are up by the most are pound New Zealand and pound Swissy. And that's not surprising at all to see that the pound New Zealand is up by the most. Simply because New Zealand, I'm guessing, is the weakest currency right now outside of the yen. Aussie New Zealand should go up, up, and away, man. So let's see here. Pound New Zealand and pound Aussie. Let's start with pound Aussie. And let's see here. There really isn't any sort of trend. However, I could see... I'm gonna have to maybe go to a 2-hour chart here. Just to make sure that those range probabilities start at the right spot. That graphical glitch that shows up from time to time should be going away in that next major update that I just teased earlier in the stream. So from here to here. So you can see we're kind of at the top end of the linear range over the last 4 trading days. We could quite easily hit these highs right here, make another sort of double top situation, and then come down for the day. Kind of like a short-term little mean reversion. So looking at this, I might actually have a sort of bearish view on this. So shorting roughly around here. And look at that stop. That stops right at the threshold where 90% of the time your top for the trading day comes in below this R1.5 pivot. So that's reasonably good at a cutoff threshold for where to put a stop. So if you get a decent rally up into this spot right here where these prior highs came in, that seems reasonable. That's kind of the 186.8 to 186.9 area, roughly around here, just above R0.5. And then you might not be able to take it down all the way to the bottom of this range here. However, just to this area above S0.5, kind of closer to this red line, the mean of this linear regression over the last 4 days, the central pivot, the daily central pivot effectively, seems like a reasonable target if you're able to grab a short up here. And that could be about 50 pips. Don't get me wrong, that is a day trade. That might happen. But let's go ahead. I'll go ahead and clock in that trade plan. And we'll see if we get the follow through. Going forward. And pound New Zealand. Probably that's a little more aggressive over these last 4 trading days. I'm not sure I want to linear regress this because the moves are just so freaking wild. Maybe if I linear regressed it over a longer time horizon, I'd feel more comfortable. But just looking at this, the high could more likely be in for the day. Yeah, it's kind of 50-50 whether or not the high is in for the day already. But if you think that there's still room to go higher, I'd say you could probably get closer to R1. As far as your low, I don't know if your low's in for the day or not quite yet. Considering how aggressively up this is moving, um, again, I'm kind of lost on this short term because I want to wait for those dairy commodity prices to actually come out bearish, right? And also for pound to kind of do its thing. It's likely going to stay quite bullish. Yeah, I see a bump in the distribution right here. Right here, if you wanted to go short, you could take a shot around R1, but you'd also be getting close to breaking a new high, and then, yeah, you're starting to deal with more tail risk scenarios sort of stuff. So I'd be on the more cautious side going into the swing up here for the day. I might just hit this R1 spot and then come down for the day. Let me go ahead and do this. So the nominal trading expectation would be something along these lines. And this is just me doing whatever is most likely. When I say nominal trade expectation, that means you're just shorting an area where you're most likely to get your top for the day. And you're putting in a stop at a threshold spot. You can even see that my expectation was, this thing could just keep going higher and higher for the week. But looking at this day ahead, right, if I'm making a nominal trade plan based off just the statistics in front of me, and this forecast was 2 days ago for people in the trading group, this is for the week ahead, right? So this forecast is on a different time scale than this one, FYI. Let's see here, and then right here. So most of your closes for a given trading day on pound New Zealand occur here between R0.5 and this S1 pivot. So if I'm anticipating just to short this likely top right around here, right, where most of the tops come in for the day, and then take it to where most of the closes come in for the day, this is the nominal trade plan. Just taking it from one high probability peak where the highs are expected to come in or where the lows are expected to come in, and then forecasting, okay, well, we're probably going to go to a nominal close where most of your closes come in. So anywhere effectively below this R0.5 is just fine. However, considering how aggressively bullish pound has been, I'm not going to hold particularly strong opinions of whether or not we'll actually go way up here or even execute this trade plan. This volatility has been kind of nutty. However, net, I still have a bullish pound expectation, at least when it comes in compared to New Zealand. So, yeah, that is that. So again, if you want these tools, you can go to thewap.com, link down below for Boss Benchmarks. Join the trading group. Get access not just to these indicators, but all of the indicators that I have right now and make in the future. 2.07 is your thought. Yeah, that's roughly where I have my expectation, although I have a bit of a higher forecast. So somewhere around 2.07, 2.074. That's probably where I am anticipating most of the tops on pound New Zealand to come in for the week ahead. But we'll see. We'll see which time frame has the more accurate setups. And in my opinion, I see higher degrees of accuracy with monthly and weekly trade plans. Simply because the day-to-day trade plans, while these tools are fantastic at getting the probabilities for daily odds, right, to help with daily trade plans and daily risk management. And as I've demonstrated in prior streams, day after day after day, it can help quite significantly with figuring out price and time forecasts for the day ahead. While that's all well and good, understand that daily intraday trading has a lot of noise in it and can have many jumps effectively. Exogenous events, you can't really plan for them. Black swans, you can't really plan for them. Alrighty. So with that all said, trading group and all, Discord and all, links in the description. And I'll see you guys actually in a bit here at when this clock hits 4:30, I'm going live again for the New York session tomorrow. So here it's Asia. I'm going to go ahead and spend the rest of the day. Have a lovely Father's Day for everyone here. I'm going to go have a lovely Father's Day myself with my family. And for the rest of the day, man, I'm going to get a good nap and wake up early and get ready for the New York stream ahead of us, man. Oh boy, it's going to be a rocky ride for the next 3 days. I'm expecting it's going to be kind of jittery, kind of sideways. Whatever trends we've established over the last week, we'll probably get to keep those trends. And then for the rest of Thursday and Friday, it's going to be a volatile mess. So stick around, subscribe, hop in the Discord, and FYI, I'm going to be in the Discord right now after this stream ends. So thank you guys for watching. I've been your boss, Joe Boss. This has been the daily plan for Plan to Profit. And I'll see you guys tomorrow.